So far this week, gold and oil are breaking out, as well as some sell-off in the indices. The dollar is down on the day. The euro and the pound are making moves. Let's talk about it, and let's talk about some of the top setups for this week. Jumping in. All right, guys, so first off, here's a quick look at the overall market performance. You can see the S&P 500, the NASDAQ, and the Dow are down on the day, but so is the dollar index, which is kind of interesting. At the same time, you see the pound and the euro liking this dollar weakness, and so does gold. Gold making a bit of a move here this morning, and oil breaking out. So in this video, I'll be going through some of my setups and things like that. I just want to ask as we get started, make sure to hit that thumbs up button and subscribe if you're new, if this video or the ones that I put out on a regular basis are helpful to you. So last week was a really interesting week in the market because we heard from the Federal Reserve, and the Fed basically outlined that they still think rate cuts are on the table for this year. They've mentioned 3 rate cuts are still their general outlook for the remainder of 2024, which of course initially, you can see it on this red candle, caused the dollar index to trade lower. But why on earth did the dollar index reverse sharply to the upside after that? Well, it's because we also heard from the Bank of England and we heard from the ECB. And these central banks, of course, you have to remember, what is the DXY? What is the dollar priced on? Well, it's priced against its peers. And so what we saw is we saw a huge slide for the Bank of England and the ECB because they kind of matched or even one-upped the dovish sounding chairman, Jerome Powell, in his Fed press conference. So what do I mean by that? What is all this jargon? Well, I'll keep it really simple. Basically, the Fed said we're going to cut rates, and then the Bank of England and ECB said we're also going to cut rates, and maybe even sooner. And that made the dollar suddenly become more attractive relative to its European peers. So we saw a big jump in the dollar index, and now the other thing to point out is we had some strong PMI numbers at the same time, but PMI numbers, in my view alone, are not going to drastically change the outlook. It was really the matched kind of one-up of the Bank of England and ECB. Regardless, the dollar index is still not quite at its recent highs, and in my view, I don't really have a solid conviction one way or the other with the dollar index right now. On one hand, I do see rate cuts are coming. That's probably going to be a weakening effect to the dollar, but again, some of its peers are in the same camp. You see the Bank of Canada and other, again, central banks mirroring that tone. So for me right now, I'm kind of agnostic to where I think price is going with the dollar index. If we see a breakout to the upside, perhaps there is some more short-term dollar strength and vice versa. But for the most part, just kind of remaining agnostic on this particular chart. And here's an update on my gold position. I bought back here. I bought a second time recently, and we are bouncing yet again from this zone. As long as we stay above this area of support, I'll stay in the trade. I would love to see if we can get a breakout through the highs. And full transparency, this is actually a signal that I shared inside of our VIP room. If you would like to get access to those signals, there will be a link down below in the description. And if you have any questions, you can use the chat link at the top of the description to speak with someone on my staff about what the service entails. Inside of the group, you'll get notifications whenever myself or one of my trading colleagues in the group shares our trades. Between myself, Frank, and Ivan, we trade all sorts of stuff, everything from FX to commodities to indices to even stocks and options. So if this is something that would be beneficial to you, I just want to add some clarity. This service is not a copy and paste, get rich quick service. That is absolutely far away from what we're trying to do here. The service allows you to see trades that are being taken. You know, if I'm taking an oil trade, you'll get the full breakdown behind why I like the trade long, where my stop loss is and why, a chart breakdown to go along with it. If this is something that would be beneficial to your trading journey, I highly recommend you join. It is worth the price to pay. You get what you pay for in this industry, and when it comes to a service like this, it is worth the money. I am very, very confident that you will get more than your money's worth for what you purchase to get inside of the group. Again, information is down below in the description. I trade everything from gold, commodities, indices, etc. So check it out down below. So I entered gold initially back here, picked up a secondary position, added to my long here a few days back, and we're continuing to kind of watch this trade. If we get a break through the highs, I'll look to trail stops and let profits run even further. Currently, here is my live account. I'm up $6,700 on this gold trade. Actually, I'm behind this camera, so there we go. There's my gold and my oil trade, which we'll talk about next, which is really making a move here today as well. And oil is up and away here today. You can see price holding that support level. This was a trade shared last week as well. And I'm gonna break down why I like gold and oil long so much right now. But first, let's just keep it technical and keep it simple. I put a stop loss below this market structure, below the 50% retracement. This was not my first attempt to buy oil. So let me be clear here. I took a $900 loss trying to go long oil here on this candle. I liked that candle reaction. And here's the thing, price came down, stopped me out, and then I re-entered the trade shortly after that wick back up. I went ahead and entered the trade again. So technical entries are just inherently very difficult. And anybody who says otherwise is just lying, right? Trading is hard, entries are incredibly hard. But the cool thing here is that trading is not reliant, in my view, on just being the perfect precision entry and exit master. In fact, I actually would say that of the two, entries and exits are far more important, because at the end of the day, if I just closed out the trade here and left this profit, I'd be leaving a lot of money on the table. In fact, several thousands of dollars on the table, right? Because currently this is floating around 3,200 bucks. So my goal here is to now manage this position, which of course, the goal here would be to see if we can actually, we've broken this level, any sort of higher low, I'll look to trail a stop, let this winner try and run and go as far as it really wants to go. I wanted to add a little bit more context as well to why I am long gold and silver, and I'm sorry, gold and oil. And you can see the bullish reading here on USO, and gold is just hovering. It's gone back and forth between being a bullish reading and a neutral reading. But when I initially picked up the positions, we had strong readings on gold to the upside, and I just continued to manage that stop loss as I showed you just moments ago. But we're getting bullish readings because of several factors. I can actually go down here and just select oil and select gold, and you can see here the breakdown behind the scoring. The commitment of traders data looks positive for both. So institutional money showing support to these assets, right? Long overall. Seasonality, the trend to the upside. Economic data is somewhat mixed between the two, but comes out strong for demand side on oil, so I like that to the upside. Retail positioning not great for us on either one, showing that retail traders are kind of more on the long side of these assets too, but this is only one category, and this is why I highly recommend, if you are somebody who looks at retail positioning, for example, a lot of traders will base their whole trading strategy off of this, and I would say do not do that, because sometimes retail traders are on the right side of the trade. They're not always wrong. Are they wrong often enough that it's worthwhile looking at? I think so, yes, but they're not always wrong. So you can see retail traders pretty long gold right now, but that doesn't mean that gold can't keep going up. So this is one indicator, and this is why I highly advise, if you're going to take a systematic approach like I do in my videos and in my trading, consider the algorithm that we've put together here as a guide, right? You don't want to just look at one metric. That would just be like using one confirmation signal, which I think is a trap, right? You want to kind of combine many different powerful indications and combining them. That's the whole point of our software, right? It looks at many factors, not just only looking at retail or only looking at the commitment of traders data or only looking at, retail sales or trend or seasonality, right? We combine all of them, and that's what makes the software as powerful as it is. By the way, if you'd like to try out the software, there's a link down below in the description to get 30 days access to the tool. If that is something you'd like to apply for, again, just fill out that application, just takes a minute or two, and someone from my staff will give you some information about how you can get 30 days access to the tool. In terms of economic data coming out this week, we have the CB consumer confidence tomorrow. We have Waller speaking, which could be, it's another FOMC member, so that could be market moving for sure on Wednesday. You also have some final GDP numbers coming out, as well as unemployment claims on Thursday. Could be somewhat market moving. Consumer sentiment, the revised number comes out at 10 a.m. on Thursday, and Friday we have core PCE price index, and Fed Chair Powell speaks as well. I believe this is Good Friday, but markets will still be open, I believe. Regardless, should be interesting to get those PCE numbers. That's probably the highlight event. This and Jerome Powell speaking on Friday will be the highlight event of the week. And just as we've been speaking, oil continues to pump higher. No pun intended, but it is pumping right now. And watch the NASDAQ here this week, guys. This is really interesting price action wise. We broke out convincingly to the upside last week with everything that came out of the Fed meeting. But then we've seen this pullback, and I actually rolled my eyes at this because I've been looking for pullbacks. I figured we're probably just going to rise back through the highs and just keep going. But not so much the case. Seems like we've actually kind of broken underneath here, and I'm very curious to see how today's candle closes. If you actually close on the daily chart below this level of support, right? Again, too early to tell, but if you get a closure like down below towards the lows of the day, that could signal that perhaps the pullback is finally here. We could see a bit of a reversion on the NASDAQ, S&P, and the Dow. I do have my eyes on one particular trade. The Dow looks interesting to me as a potential pullback here. I think it's like a 61.8% retracement. Yeah, 61.8% retracement on this recent move on the daily chart. I'm looking at 39,150. And again, part of the reason for that is we're getting a bullish confirmation on the edge finder when looking at everything from the commitment of traders data, so on and so forth. You guys know the drill. As a systematic trader, I'm looking for confirmations from my system to allow me to find better opportunities. Also, the DAX, let's have a look at this chart here. The German 40 has just been on a run to the upside. Although this isn't quite pulling back enough for me just yet, I'll keep my eye on this one. Same thing with the FTSE. These things are just running. The Nikkei is pulling back here, maybe potentially forming a bit of a double top here. Could be a little bit, like I said, a bit of a pullback period for indices coming, and in which case I'll be watching German 40 as well as the Dow right now. And in terms of sell side, what you can see is, although I just mentioned the UK 100, we're actually getting bearish readings, and it's for the same reason we're getting some potentially bearish readings for the pound currency pairs. You can see some not so great economic data coming out of the UK, which is giving us more of a bearish read on these UK instruments. So keep an eye on this one, but very, very concerning to see all of the pound pairs here pretty much. Almost every single one of them every single one of them is in the bearish territory, almost except for pound Kiwi, giving us a neutral reading. That's a signal, and usually that does equate to kind of sell side. This formed last Thursday, I believe. We started seeing all these pound pairs, and you can see that the market's just been rolling over here on the pound pairs. So there's pound USD. We could take a look at like pound CAD, pound AUD, for example. A little bit flat there, but you can see kind of an interesting signal showing up there. And man, oil just keeps going. Yields are up here on the day. Same with the 10-year, 20-year yield rising here as we speak. Kind of interesting to see that. And I would keep an eye on these yields. I know a lot of traders don't talk about them very often, or a lot of traders don't use them very often, but remember, yields are very important to financial markets. Higher interest rates are generally going to be considered concerning for business growth, concerning for the opportunity cost of investing in stocks rather than just going into bonds that are offering higher yield, right? There's several factors there, and rising yields also can put pressure on more interest rate sensitive areas like gold, right? If the financial market thinks that we are going to cut rates, that's great for gold. But if they start backing up, is what they call it, backing up on the yield, right? If that makes a move back higher, that could be considered negative for some commodities. I do have a position open on TLT. This is a bond, a 20-year Treasury bond ETF. I've sold puts on this one. In fact, I'll show you my P&L on this one right now. So here are all my current positions, but I mentioned TLT. So TLT right there. I sold puts on this one pretty much at max profit for this, as I sold puts, essentially saying I promise to buy shares if it comes down to a certain level. Haven't come down. Also, quick little plug. WeBull's bringing futures to their marketplace, and I'm thrilled about that. I've used WeBull for many years now, and I absolutely love the platform. It's a wonderful, wonderful chart platform. What I love about it so much, and the reason I chose WeBull as my brokerage, is because WeBull gives you so many analytics on your trading. So a lot of times people will plug into like an external like trading performance analyzer. WeBull, I don't even have to do that. There's so much like analytical tools within the software. It's a wonderful tool. Again, if you'd like to check out WeBull yourself, there's a referral link that I'll share down below in the description. If you choose to use that, you'll be supporting my channel. You don't have to, but by signing up, you get a bunch of free shares, and so do I. So it's a way to support my channel totally for free and get yourself some free shares. With that said, if you're not in the US, or you're looking to trade FX, or you're looking to trade CFDs, there will also be other links down below in the description for other brokerages. I would highly appreciate if you choose to use those links. Again, it really supports my channel and makes these videos continue to be free. So thank you for watching. Have a great rest of your day, and see you tomorrow. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.